Hello, and welcome to the latest edition of the Sharesify podcast. I'm joined, as usual, by my friends and colleagues, James and Steve. How are we, chaps?
Again, dandy.
Very well.
Yeah, well, dandy, Steve. Yeah, for sure. I mean, it's another week chock full of tech screamers, isn't it?
It's honestly, it's been just an incredible week. It really has. I mean, $1 billion plus, $100 billion plus companies jumping by 35-40% in a single session. It's pretty staggering. I don't really remember an earnings session quite like this, where you've had such big jumps. And we're talking about Snowflake, of course, the data analytics company, and overnight last night, Dell. So briefly on Snowflake, I mean, the real story here is that investors are really buying into the fact that it's going to grow or is growing into its valuation. It's a highly rated business, and they really like the idea that its growth is now moving into the valuation. So that's really explains why its share price just ballooned. Dell, slightly different story. It's really a case of the market has decided. We've had multiple quarters where we talked about it being a real AI infrastructure winner. They say the market saying, yeah, we buy the story now. We are actually going to reprice you as not just a manufacturer of peripherals. We're going to price you as something fundamental to how AI moves forward. So hence share price is indicated to go up about 33% as I look at the market today. But that's
Wow.
pretty staggering stuff.
I mean, it really is. I mean, you and I are old enough to remember the tech bubble. I don't remember stuff going up by that much. But it's not just tech. James, we had some huge moves in US retailers as well this week.
Yeah, not quite of the same magnitude, but eye-catching nonetheless. So Dollar Tree up sort of double digits, Q1 beat and raised guide. And Best Buy as well, Q1 beat, perhaps fueling hopes of an electronics upgrade cycle. So that one was going well. Letting the side down somewhat were Gap and American Eagle, and they're both down. They're both flashing red after sounding the alarm on sort of caution around female shoppers. Um,
Mm,
Yeah, and the one we talked about on
interesting.
Wednesday was Costco trading on north of 50 times. So price for perfection. Results were pretty decent, but the shares are red as we look now.
It's really interesting,
Yeah.
James, isn't it? Because I mean, you think of a retailer, a big box retailer like Costco, and it's on I think 45, 50 times PE ratio. I mean, that's more than some of these exciting AI companies. I suppose that tells us that investors and markets just see this as such a reliable business. It just churns out cash, it churns out revenue every single year, and so you've got a great modest, albeit growth, but you've got consistency and you've got income coming in that you pretty much can take to the bank.
Yeah, absolutely right. It's that membership model I think that investors really love, Steve. And the years of compounding of upgrades has all resulted in that very lofty rating. Plenty going on in the investment trust space as well this week, hasn't there, Ian? So we've had
Oh, crikey, James. Yeah.
yeah, European opportunities to wind itself up and merge with JEGI, which is JPMorgan European Growth and Income. And we've also had Finsbury Growth and Income. So the board there has vowed to do whatever it takes to pep up performance. That includes an enhanced dividend, raising the gearing a bit, and of course, being a very concentrated fund, that does increase the risk slightly of this one because we know that Nick Train runs very concentrated portfolios.
Yeah, and of course, you and I, James, talked earlier in the week to Georgina Britton of the JP Morgan UK Small Cap Growth and Income Trust, and that was we said on Wednesday it was a really revealing conversation, and we've got some other podcasts coming up. Ian, you're next at about I believe with Custodian REIT, is it?
Yeah, very excited. Our first real estate investment trust coming on. Richard Shepard-Cross of Custodian REIT Income will be joining us not next week, week after. So keep an eye out for that.
And then
I was
we've
also
got
going to, James,
a
just
few days after that, we've got another one booked in, and it's quite an interesting one. It's not a trust I know very well, but it's another JP Morgan trust. It's the European Discovery Trust. So obviously it's focused on Europe, but what that actually means in terms of discovery and the kind of things, these are the kind of questions we'll be asking. So look out for these podcasts as they come through.
yeah, absolutely. James, I was just going to go back to the retailers and say, yeah, you had some nice double-digit gains there in the US. We've got a double-digit gainer in the UK today as well. Ocado, the very popular, not just with investors, but very popular with the punters. online grocery retailer and software platform. And its shares up 10% today because they've announced a deal with Asda. Now, Asda's hanging on there. It's the third biggest UK retailer by market share, according to Kantar, about an 11.5% market share. That's some distance behind Tesco and Sainsbury's, but it has quite a big online operation itself. It fulfills something like 700,000 orders a week. And what the deal with Ocado is, they're going to take over the whole of the operation, the software side of the operation, move it onto their platform. So that'll be Ocado's front end, that'll be in-store fulfillment, that'll be click and collect, and also with these aggregators like Just Eat, Uber Eats, and so on, Deliveroo, they're going to handle that side of things. I think this is a smart deal for Asda, and I can see why people are excited for Ocado. Even though there's no money coming in, it won't impact cash flow this year because they're not starting operations till next year. But it's a positive sign for a company that has really struggled to convince the market that
And
the
it's always sat
software
in
side of things is working.
and it's always sat in that awkward space. I mean, it's always had a real fan base among retail investors, but there's been lots of investors who really don't like the idea. Is it really a robotics company? Is it a retail platform company? Is it a retailer? And it doesn't really sit in any of those niches, really. It's a combination across all of those, but it's really about driving its platform. It's not really about deliveries. It's not really about groceries. It's about that platform. That's what really excites investors. So you get a big name brand like Asda on board, and it's massive volume straight up front. So that's should play into the fan base really well, and indeed it has.
Yeah, it should be. Just quickly, James, going back to investment trusts again. Next week we've got quite a few coming. We've got capital gearing, haven't we? That's one of the preservation trusts, as they're
Yeah.
called. A few others.
Yeah, we've got a private equity investor, Oakley Capital, as well, and also our friends at Seraphim Space. So, very hot investment theme. So we'll be seeing what they've got to say and perhaps do something for the web if it's something that catches our eye.
And a nice segue there, because we've been doing a lot of talk about the SpaceX IPO that is incoming, but as some other sort of slightly sideways moves, everyone knows who OpenAI is these days, ChatGPT. Everyone is starting to become very familiar with Anthropic, the brains behind the Claude platform in AI. And Claude went to its private investors recently and raised $65 billion of fresh growth capital at a valuation of $900 billion. Now that tops OpenAI's most recent valuation of around $730 billion dollars. So these are two potential IPOs for later this year or possibly into 27. So investors, you're not able to invest in them directly yourselves. You might be able to access them to funds like Scotch Mortgage, etc., etc. But certainly these give you a sense of the kind of valuations they'll be looking for if they do pull that IPO trigger.
Yeah. And yet more tech to come next week, Steve, about again
I mean, we've
Broadcom
got
and
two pretty
CrowdStrike.
interesting companies. Broadcom again seem to be as one of the real big AI infrastructure
Yeah,
winners up to
picks and
date.
shovels.
23% or so year to date, the shares are up. Be very interesting to see what they have to say. It's kind of that one of those situations where they've got to really go over and above expectations, which are already pitched quite high. So volatility could be at play there. So be wary, listeners. And the other one that's well worth watching out for is CrowdStrike, one of the most popular cybersecurity companies in the world, one of the biggest in the world. Of course, it's embracing AI. And the night before CrowdStrike, which I think is next Wednesday, you've got Palo Alto, which of course is another bellwether of the cybersecurity space. So again, lots of interesting stuff to look out for next week.
Yeah, James, there's a superhero connection next week as well with one of yours, isn't there?
Yeah, there is indeed. Yeah, you're referring to Ulta Beauty there, are you, Ian?
That's
Yeah,
the
they've
one.
done a tie-in with the new Supergirl movie, which I'm sure will all be front of the queue to see.
Yeah, front row for that.
Yeah,
Absolutely.
exactly.
On that note, we'll wrap it up for this week. But as Steve said, keep an ear out for the Custodian REIT pod, which is coming up soon. And you lucky people, we have a very special event coming on the 24th of June. So won't say much more about it at this stage, but do keep an eye on the events page on the Sharesify website because that's going to be an absolute cracker. With that, we'll wish you a good weekend. Cheers.
Take care.
Cheerio.